there are over, 850,000 private student loans are in default right now around the country. And that adds up to about $8 billion. And so, Michigan's gonna have whatever percent, well, a pretty good percentage of the 850,000 private student loans that are in default. As you know, Charlie, when you have a student loan, you can never discharge that loan. You're going to have it for the rest of your life. So sooner or later, you have to start paying down on that loan. But what normally happens, and the person who normally, if you look at when those defaults occur, they tend to occur very early, soon after a student has graduated from school. So they are young adults who are getting started in life. They've graduated, and sometimes they don't get a job right away, or they get a job that doesn't pay as much as what they need to pay all their bills as they're getting started, and yet their student loans have come due, and they now need to start paying. And so you'll see a very high default rate among young adults who are just newly graduating. And then as they get a job and as they start making money, then they start making their payments on those loans. And what this bill said, but unfortunately, because they have that default, now that's on their credit report. And as you know, if you have a default on your credit report, it is difficult to get a loan. So if you want to buy a car, it's difficult. Or if you do, you have to pay a much higher interest rate. It may be difficult to rent an apartment or pay higher rent. In Michigan, they use credit scores for insurance, so your insurance rates are higher. So it is a problem for that individual for many, many years because they have the default on their credit report, even though they've started paying on their student loan again. So the bill is very straightforward. It says that if you go to your bank or credit union and you have a payment plan and you make payments for 9 months, that's taken off your credit report as if it never happened. So it basically gives the student or the recent graduate a second chance. We already do this for federal loans. So if you have a federal student loan and you make payments, you go back making payments for 9 months, it's taken off your credit report. However, this same process does not exist for private loans. Private loans make up about 15% of the student loans out there, and it's a growing number because increasing number of students need both federal and private loans to afford education. So we're saying that's why we call it the FAIR Act. We should treat private loans the same as federal loans. A lot of students have both. So if you had your federal loan and you're starting to make those payments, they may take that off your credit report, but your private loan does not come off your credit report, and you still have all the negative aspects of that. So this is a way to help new graduates get on their feet. It's good for the economy because the sooner they get on their feet and start buying cars and out there in the economy, that's good for everybody.